Hi everyone, Erwin here welcome to the Truth About Real Estate Investing. Me for Canadians. Yes, you'll notice I'm wearing a USA hockey jersey. No, I'm not moving. I'm just simply moving some of my capital to the States. So I'm here to talk about always to be transparent, what Sherry and I are doing with our investment portfolio, and to share with you what I learned on my recent, what I call the Make Real Estate Investing Great Again tour to recently where I went to Atlanta, Georgia, and I was hosted by my friends at Share SFR. SFR stands for Single Family Rental. So if you don't know who they are a US asset manager in the real estate space. Anyways, let's get into it. So at a glance, why Atlanta? So I'm old school. I come from an economics and business background, so I look at economics in terms of how I lead with my decision making, especially when it comes to investing. So let's look at Atlanta. I'm not going to do a whole ton about it, but let's look at it at a glance. Of course, feel free to do more due diligence. I've done mine and I'm satisfied personally. So Metro Atlanta, so the greater Atlanta area is a total of 6.1 million residents. It's pretty big. The population grew 15.9% over the past decade versus the national average of 6.6. That is what I'm looking for. I'm looking for in-migration, immigration, looking for growing population, because growing populations generally point to job growth and rising real estate prices. Atlanta is the home of the busiest airport in the world, and the largest, and the airport and surrounding industry is the largest job base within the state of Georgia. The state of Georgia is ranked number one. I like the sound of that. In 2022 for doing business per areadevelopments.com. I like the sound of that. Headquarters to 17 or 31 Fortune 500 or Fortune 1000 respectively. Headquarters to, right? Again, how many cities can say the same thing? I'm a proud Canadian. I'm a very proud Canadian, and I don't have any plans to leave this country. My family and friends live here. Made a lot of money here. But my point though is, can you name a city in Canada that has similar statistics to what I've just shared? If you do, please let me know, because I'd be interested in doing my due diligence on that place as well. And don't name any US places. I've already likely done due diligence on those places already. I likely have planned trips to those places as well. Technology hub. The tech talent pool as a percentage of labor in Atlanta is 5.6 of the overall labor force. So 5.6 of the overall labor force is in tech, which beats the national average of 1.2. Point is, Atlanta, Georgia is a technology hub. All right, and now again, my decision making, especially around investing, largely comes down to economics and math. So let's look at some math. So here is an example of a property. This is my client's listing. This is a good friend of mine. This is his property that my team and I are listing for him as an offering for sale. It's a 1950s bungalow. It's already been converted to have a legal basement apartment. This is a duplex. We've been doing this type of investment since 2015. This has almost been our bread and butter for 8 years in terms of investing. Asking price for this right now is $799,900, so $800,000. We've had single-digit showings in 3 months. The market is telling us they do not want long-term rental properties in this current high interest rate environment. I always thought that this was duplexes or triplexes were the best investment in small residential real estate. The market's telling me different. The rent for this property is the annual rent, if you combine the both bottom and top tenants, $50,400 per year plus hydro. Tenants have to pay hydro still. That works out to a 6.3 rent to price ratio. That's called gross yield. And again, 6.3. So just remember 6.3. Just remember 6.3 because we're going to go to the next slide. So here we're going to compare that Hamilton duplex compared to a single family rental in the US. So this email came to my inbox on October 19th, right? This property is in the suburbs of Atlanta, Georgia. From my experience I've been around real estate since 2005. So my thing is I generally invest in the suburbs of major cities. I don't actually invest in the core. It's generally not a bad idea because cores typically mean more traffic and sadly more crime. Anyways, so again, my point is that I want to rent in areas that are not poor and have less crime. So this property here is in Conyers, Georgia. Again, this property is about 35 minutes from downtown driving. Again, this arrived in my email. and that's to blow up the image of the house. That's what it looks like. It is so actually first off, how much is this house in your neighborhood? So I stole these slides from my presentation for the US Investing Workshop. So if you've already seen this presentation, apologies. And if you haven't, you missed a great workshop. So how much is this house in your neighborhood? For me, this house in Hamilton is between $800,000 to $900,000, right? So also FYI, this house is built in 1988, almost 1,500 square feet, 3-bed, two full bath. It also has a standalone tub and double sink in the primary bathroom. 2-car garage, as you can see from the image. This house sold for $270,000 to a share investor. $270,000 US, right? So again, let's look at the numbers. $21,500 rent plus utilities. So that's the annual rent. $21,540 year is the gross rent. So compared to the price, that's almost 8% rent to price ratio. 8% gross rental yield. So that is higher than the Hamilton duplex of 6.3, and the tenant still, and that's still plus hydro. This one is plus all utilities. So based on numbers alone, which one's better? There is some slight differences in terms of like vacancy rates. In the US, generally vacancy rates are higher than GTA, Golden Horseshoe vacancy rates, but there's no rent control. There's no rent control in the States. That tenants that do not pay rent, generally they're leaving within 30 days. So the risk is considerably lower in certain cities, certain states in the US. All right, and if you want to have properties like this arrive in your inbox, if you want to have access to the Shares website and see how the numbers break down, go to www.iwin.sharesfr.com. So the link's right there on the screen. And so, you see I'm here wearing my USA hockey jersey. Yes, I'll always continue to cheer for Canadian hockey teams whenever they play the US. That'll never change. But obviously, based on the numbers, based on the ease of doing business in the US, we're pivoting here at iWin Real Estate. I cannot, in good conscience, tell an investor that they should be buying in an environment where the tenants have much more control and rights than we do as landlords. And funny story, when I popped on this jersey, I was pointing at the back, and Cherry said, "Mr. What?" And Mr. What? And I said, "Oh, it's actually not Mr. It's an acronym for Make Real Estate Investing Great Again." So moving on to our trip to Atlanta, Georgia. So Share, they decided to rent a Cadillac Escalade. I was warned we'd be going to some rough areas. It wouldn't be my first choice to be riding around in such a luxurious vehicle. In the bottom right, you see a picture of the first house that we saw, new construction. Actually, it was a foreclosure. The bank has taken it back. So it doesn't look like it was ever lived in. Beautiful house, beautiful house. I think it's around 3,000 square foot against a bank foreclosure sale. Never been lived in. Doesn't even have a refrigerator, because that's a thing in the States. Builders do not provide refrigerators when on new sales. You can see the lot is absolutely enormous. And this house was asking about $385,000 for a 3,000 square foot home. Beautiful home. I think this house was one that had a walk-in closet that I measured out. I walked out at over 100 square feet. That's right. The walk-in closet is over 100 square feet. I don't know who needs that much space. Here's another newer house that we saw as well. This house, again, gorgeous. You see here, I took a screen capture of the Realtor.com image so you can get an idea what the price was. They've already had a price drop. This huge, like in Canadian context, especially Hamilton context, this huge house, 2,300 square feet, 4-bedroom, 2.5 bathroom, is asking $365,000. It's likely still on the market as well. It's a bit of a buyer's market in the States, in certain places, and particularly in and around Atlanta. Again, though, gorgeous house. Here's another one, also gorgeous house, brand new. I don't believe this one's ever been lived in. The weeds are getting a little out of control. Funny thing about this one, 3,000 square foot home, gorgeous house. I have some more pictures. It was funny, when you see the lot in terms of like Golden Horseshoe standards, the lot is still humongous. But it's funny, the Atlanteans we were with were saying what a small lot it was. Again, it's a 3,000 square foot home. 3,000 square foot homes don't come on small lots, and this one was a large one. So here's some pictures to see just how gorgeous this house is. You see the island is enormous. It overhangs and has a place for kids to eat breakfast on. Backsplash is nice. You can see on the left the bathroom is enormous. It's a standalone tub and a large standalone shower. And I'm not trying to sell this house either. I actually don't like these houses. I generally am not, does not fit my buy box for investment. I'm typically buying resale properties, and that's just my style. Maybe it's my my frugalness, as generally I would buy a used car over a new one, because everyone knows the value of a new car just completely falls off once you drive it off the lot. I feel the same way about houses. Anyways, and then now I'm getting excited. So this is the next house. So now we saw some houses that were on market. Now we're looking at houses that the property manager that was taking us around to tour. These are properties that investors have already purchased, and the property manager is managing them. So they're taking us around to see, because they can get us access to these properties. So this is a rental property. And this bungalow is from the 1950s, absolutely enormous. You can see like the driveway's double drive wide, and the lot's just huge, house is huge. An investor paid $170,000 for this house. $170,000. I'm told they had to put in $30,000 for initial renovations, but still, we're still talking about $200,000 total that the investor is in. And now let me back out. I took this picture from the end of the driveway. You see how deep the front yard is? The backyard is just as deep, and you can tell it's extremely wide. Now, jokingly, I was telling my friends, I think you can build 8 or 10 garden suites on this property. Not that you would need to, because a garden suite would cost more than the price of this home that comes with the land. Here's some pictures from the inside. This property had been through one renovation already, like I mentioned, $30,000. They upgraded the countertops to stone, stainless steel appliances. They likely painted the cupboards. And again, we had the property manager with us, so he was telling us that what they have planned. So we're in between tenants here, so it's turnover time. They're going to do some light renovations in order to get the rents even higher, to take care of any sort of deferred maintenance. So the floors in this property need to be redone, and they're going to touch up some paint. The budget for that, $6,000. They're going to replace all the flooring with vinyl plank, and again, touch up some paint. And the rent for this property, expected to be $1,800. $1,800 for a property that we're all guessing is worth somewhere now between $230,000 to $250,000. $230,000 to $250,000 with the current market value for this home. $1,800 rent. I would do this all day, especially when you consider how much land it comes with. Moving on to the next property. Again, this is another property that our property manager already has under management. This one's already been through a major renovation. It's actually a funny story. It's always fun to work with like people who tell it like it is. The property manager warned us the house had just been sprayed a couple times for fleas. So we're making all sorts of jokes well, actually, as I was making lots of, I think people know I usually make lots of terrible jokes to tuck in your pants into your socks. Anyways, I didn't see any live fleas. But anyways, again, house is gorgeous. 3-bedroom, two bath. You can see the bathroom has a large countertop, has a separate tub, separate shower. Like none of my rentals have that. This is the typical, what they call buy box. This is the preference for institutional investors, is to be buying 3-bedroom homes with 2 full baths. So this house fits that criteria. Again, another humongous lot. Bedrooms are huge. Here's another angle of the bathroom on the left. You see there's a standalone tub. Again, it's a granite countertop. Wraparound porch. It wraps all the way to the back of the property. And then in the bottom right, you see that is the backyard. Absolutely enormous. Here's another house. This was actually my personal favorite. I don't know why. I just thought it was cute. This raised, I think they call it a raised bungalow. I forget what style this home is. Anyways, there's 3 bedrooms, 2 bathroom on the main floor, and then on the main floor would be up the stairs. Anyways, and then on the ground floor, there's actually another bedroom. So this is a 4-bedroom, 2 full bath house. You see the bathroom there, double sink, standalone tub, separate shower. Again, I don't know if anyone's rentals have these. not among my clientele. Again, the house is open concept. It's gorgeous. You can see again stainless steel appliances, quartz and granite countertops, stone countertops. There's a look, and then on the right you see this. There's a deck on the back, and the backyard is absolutely enormous. Just again, humongous lots. So this house, according to the property manager, would be worth somewhere around $310,000 to $330,000 in today's market, and it will rent for $2,100. So let's do some high-level numbers. So again, we're going to do the same math, just high level, just to keep it simple. Gross rent yield, which is annual rent divided by purchase price plus renovations, right? So this house is already turnkey. The belief is that it's worth somewhere around $320,000. The rent for this house would be $2,100 per month. So times 12 to get the annual, talking about $25,200. The house is worth around $320,000. That works out to almost 7.9% gross rental yield. So again, if you have a property that beats this in Ontario, please let me know without having to go to like Sudbury or Thunder Bay, right? Again, this property is somewhere around 35 minutes away from downtown. So it's it's a very reasonable distance. And again, no rent control. This property was a funny one. This property may have been the nicest one that we saw, and the last property we saw. And we were told it was in a high crime area. But you know, I'm from out of town. I don't know the area. I'm looking around. It looks very suburban, very middle class. But the property manager just explained to us, that's him standing on the far right, Tim, really nice guy. He's telling us that squatters had broken into the house twice. Twice the house had been broken into, and they went through the garage. And they graffitied the walls. Lovely people. But you know what? The cops came and they took care of it. I'm not sure how well things would go in Ontario when you have squatters. Because the squatters are trained to say, oh, I have a lease, I have a lease, I have a lease. Because they know what to say to cops to try to get them to go away. Anyways, so again, this property is in a high crime area. House is gorgeous. Tim let us know that the investor who owned this actually bought this property as part of a portfolio, because there's nothing really that made sense about this property. It was way too nice, it was too expensive, and it was on a busy road. But again, it was part of an investor bought a portfolio of properties, and this was just one of them. So you can tell this property is just way too gorgeous. For example, on the left, that standalone shower is not even the main bathroom, right? Yeah, and then the fireplace, gorgeous, kitchen, gorgeous, vinyl plank throughout. This is actually the master bathroom, sorry, principal bathroom. And again, stone everywhere, including marble floors, standalone shower, standalone tub. You can see my reflection in the picture of the shower, so you can tell I was there. Anyways, so again, this is all about math. So we talked about this example already. Again, if you're interested in getting these types of properties sent to your email, I have my own referral page with Share. I have some announcements to make shortly. www.iwin.sharesfr.com if you'd like to see properties just like this and the full analysis. Now, I actually want to get into the numbers a little bit. So my plan is to sell the majority of our longer-term rental portfolio, or if not all, to raise cash in order to buy properties like this. So again, this is that same property that I talked to that's in Conyers, Georgia, about 35 minutes from downtown. So this was what I would do. And this is what Share's website looks like. That's why I suggest that you create your own, you go to that landing page, iwin.sfr.com, create your own login, because then you'll see the website and you'll be able to use the same tools that I'm showing you now. So for example, on the website, there's a slider. You see that green dot, that's a slider. You just put your mouse on it, you slide it back and forth for you to choose what kind of down payment you want, right? Do some sensitivity. How much down payment do you need? And what interest rate do you have to pay in order to make this property work? So this is a slightly older example. Interest rates have since gone up. So I think I'm actually going to have to be paying about 8.5% interest. But again, this property is $270,000. My capital I have to get into this deal is way less than the down payment on an investment property of mine. Actually, the cost of a basement suite conversion is similar to what it would cost me to get into this property. And I'll let you determine which one you think is a better investment. Anyways, So let's get into it. 50%. My plan would be go with cash. Again, I'm going to find cash. I'm going to raise cash by selling off some of my investment property. In year one and year two, I'll still positive cash flow. I've had enough negative cash flow in my life. I'm not looking for any more. So I'm going with cash, with a large cash down payment. So again, year one, I'm going to cash flow around $3,000. Year two, roughly $1,000 US. Still positive. And then I'll refinance in hopefully 2 years time, 2 or 3 years time. I'm going to take some of my money out. So I've moved the slider to the left down to 35%. I'll likely move it a little even lower, so I'll have more capital to buy more property. So basically, I'm only into the property for a third now. And the interest rates will fall. In about 2 to 3 years, interest rates should fall hopefully around 4%. Also, I will have built credit in the US, and I will get a better interest rate. And so around year 3, you see the cash flow gets pretty exciting now. We're talking about $300 US a month on a $270,000 property. By year 5, the cash on cash yield is 4.5%. Cash on cash 4.5%, that's similar to a bank dividend, right? Year 5, 4.5 cash yield. Year 8, the cash yield is now 8.8. Why is the cash yield going up? Because there's no rent control. There's no need for cash for keys. Simply raise the rent. What a lovely concept. So again, for the multifamily investors out there, you always talk about cap rates. That's okay. My friends at Share are from the REIT space as well. So here's the cap rates. We're looking at 5 to 8 cap rate, right? So again, if you have a better investment in Ontario, please send it to me. I have friends that I've spoken to about this personally, who I know kill themselves to get 7 caps in apartment buildings. That means a lot of cash for keys, a lot of letting people, like a lot of soul-sucking functions that they have to do in order to encourage tenants to leave, and so that they can go renovate, spend more money in order to do a repositioning of a property, and that can take 5 to 10 years, right? In 10 years' time, my cap is 8.2. I'll take that all day over with a boring property over versus having 30 rent-controlled tenants, and I am their largest expense in life. I'm not interested in that. Life is too short. So how much does it cost to invest? So again, this is my 50% down scenario. So I would have to invest somewhere around. I did the U.S. Canadian conversion. It's roughly about 1.35 these days. So it cost me about 210. I had to go out of pocket 210,000 Canadian. That includes reserves as well. You see there's a line for reserve fund as well, 3,500 US. So again, cost me about 210,000 to play. Compare that to a strategy that we've been promoting for quite some time is garden suiting. Garden suiting, and then shout out to Andy Tran. I stole this screen capture from Andy Tran's website. A garden suite like this one, if you general contract it yourself, you can hope for 250,000. 250,000 and you get a house just like this. Remember, you have to put it on land that you already own. So it doesn't come with any land. 250,000. If you go to a general contractor or go to a modular builder, it's gonna be around 300,000. That's my experience at least. So which would you prefer? I know which one I prefer. And for anyone asking about financing is actually easier in the USA than here. Gotta love the Americans. Debt service coverage ratio mortgages. So just like for 4 units or 6 unit and above apartment buildings, qualification is based on the rents and the property. Americans don't even know how to read our credit. So again, if the rent covers the mortgage payment and operating expenses, property tax, insurance, those sorts of things, and you have 20 to 30% down, you can get a mortgage. Again, my plan is to come with larger down payments, 40, 50%, in order to make properties cash flow. If you need a mortgage, you can contact my friend Jillian, who's been a past guest on my show, longtime friend of mine, past client of mine, good friend. Just email her at iwin@lendcity.ca. All right, and that's it. That's iWin's how to make real estate investing great again. That is the truth about real estate investing. And ever since I've started this journey on going down this USA rabbit hole, folks, clients, Many people have been reaching out and been saying the same thing. I'm looking to divest my risk away from long-term rentals in Ontario and BC. We're going to continue here to share the truth about real estate investing, how we're going to make real estate investing great again. All right, until next time. Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link is also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.